All right, Wednesday today, 29th of April. Let's see what the market is about to give us. All right, let's look at, do you have any news today? CPI at 2 o'clock. Worry about that right now because we're in the London session. Mm, FOMC. Yeah, that's why I enjoy trading the London session most of the times because the news are mostly happening in the afternoon, right? I don't need to wait for the news to happen before they happen. So, yeah, let's see here. So, what do we have on the DAX? It's been quite a slow week. So I'm looking at bullish bias today. Why? We have a break of structure to the upside. We're continuing to the upside. I'm seeing the market maybe touching this fair value gap right here on the 1 hour, or taking out these liquidities right here on the 15-minute. One, two. I'm not sure it's going to reach this area. Maybe reach this equilibrium part when the candle close. The equilibrium, I put a high right here just to have it like a reference for now, because this is not valid yet until the candle closes. So I'm not seeing it to be valid until the candle closes, but I'm using it as a reference. So like how probable is it that this body of the candle continues here? And so I'm using this just as a reference, because the only way that this wick continues up is by the body or the market goes over this and creates a new wick or new high from that candle. So I'm just using it as a reference, and I'm using the equilibrium as a reference to be able to wait for the market to go inside of the premium, sorry, go inside of a discount, and then continue to the upside so we can take a long in this area right here, hopefully. We'll see what the market's about to give us. All right. Let me do a 15-minute. We have a 15-minute fair value gap right here also. I'm going to mark this out, set an alert on this 15-minute low right here. Now jump into the NASDAQ. Let's see what's going on the NASDAQ. Same bias here. I'm bullish on the bias. We have a breakout structure to the upside. Strong breakout structure, clean one to the upside. And the bias is bullish for me today. Same thing goes here. There's a low. By the way to mark out equilibrium, the way not to do it is through the low, from the low right here to the top right here. Why is this not correct? Because we have neglected this area. There's a high, there's a low created, there's a high, there's a low created, and there is a high. This is how the market goes. So the correct way to add this equilibrium is from this area. Or from the top here to the bottom here. That's how we count out the equilibrium correctly. The higher time frames gives you better equilibrium levels because there are less spikes or less highs and lows. Like, for example, go into the 15-minute. There's a lot of them. So we have, let's see here, what do we have? I'm looking at if there is any fair value gaps right here that's not been touched. Just gonna mark it out as blue so I keep my chart clean. Yeah, this is probably gonna continue down. Take out these liquidities right here. Yeah, I don't need to. Sorry about that. Just to make sure everything is okay. All right, and we have on the 1 hour liquidity resting down here. Now, will the market continue to the downside to take out this liquidity? Probably not. And yeah, so this is what I'm looking at today. I'm seeing that the market's continuing to the upside. I'm bullish. I'm saying that the market's going to continue to the downside and then break out of this range and continue to the upside, taking out some liquidities and continuing to the upside. Um, so we have it both ways. Either it breaks through the price, either breaks through the overnight range, with a 50-minute candle continues to the upside right here, then continues to the upside, taking out these liquidities or these highs on the 1 hour. This one. So we can take our first take profit and have it just continue to the upside. Big moves usually happen on Wednesday. Um, yeah. You can also see the one I'm using right here, the indicator that I'm using is called the ICT everything. Right. This is the one I'm using, ICT everything. It marks out the Asia session open just like that. You don't need to have this indicator. You can just come to the market and just mark it out with your. That's it. That's all it does basically. It marks out the midnight, and on the DAX it marks out at 2 o'clock. The switch between New York to Asia session, 2:15. So we can see that the equilibrium. This is the first candle that opened up on Monday Asia session. So the equilibrium of the entire market starts here, meaning this is usually where the market, if it's not way too bearish or way too bullish, you usually want to trade in this range, between these ranges. This is how it goes. Takes out some liquidity, continues to the downside. Takes out some liquidity, continues to the upside. Takes out some liquidity, and it goes like this until it breaks through. Until it breaks, we're gonna fake people out to the upside and then continue down. This is what can happen. All right. Today I will be releasing Risk management video in the classroom. Behavior finder. Risk management, slow track strategy. I will be releasing that today and tomorrow fast track strategy. These are so important to watch. Um, uh, I did another risk management video today on how to pass a funded account and how to keep a funded account. It's not about just passing it. So feel free to watch these. They are long videos, I think, and they are with graphs and mind maps and how to think. And you just need to follow that. That will help your risk management and help your psychology a lot. Trust me. And yeah, this is going to be released in 9 hours. Do we have more people on the lives on London session or on New York session? Welcome. People are dropping in. Welcome. All right. The market's about to open in 2 minutes. It's about to sweep this liquidity. I'm just going to grab a cup of coffee and come back. Good morning. That was loud. All right. It just swept liquidity right now, 1 minute before market opens. Right. It just swept liquidity. Now, if this gives me a setup, see here, let me just fix it. The first minutes of market opens is not something I trust. Why? Because it's too volatile before market opens. Like these spikes happen before at the market open when they're not certain. So this is our strategy basically. It's swept liquidity. We are correct in the bias, the bullish. We are it created a breakout structure right here. There's a fair value gap right here, but I'm not taking it. Why? Because we are too close to market open. This can easily just tap into this fair value gap, continue to the upside, and continue. That's fine. But it's the market is so uncertain the first minutes of market opens. So that's why it's not worth the risk. because buyers and sellers are still deciding, are we going long today, short today, what are we doing? So it's not worth taking the risk. That's why we have another symbol that we're trading, which is Nasdaq. Nasdaq has still didn't sweep liquidity on the 15 minute. It's all about taking good trades. It's it's um, we win by doing less. We do less to gain more. That's counterintuitive to our hustle culture, right? Do more, hustle more, sacrifice more. And also another thing is that there's a fair value gap right here that it can reverse from. And there are still liquidities right here that's not been taken out. The liquidity like right here not been taken out. Liquidity like right here not been taken out. So there's a lot of liquidity resting on these lows that's not been taken out, where the market can reverse from. This is the thing. We can think about it like this. Oh, we should have. It's gonna be in this. It's gonna be in that. We should have entered right here, and we should have put our stop loss right there, and we should have, mark out our take profit areas right here. This could have given us a 1 to 6. All these thoughts. It doesn't matter. It doesn't matter because we don't trade in this area. Put an alert right here. Removing this alert. So before, I mentioned that if we were to take a trade so close to market open, like I'm not here to say, see what I told you, because I can be wrong, of course. But this is what usually what happens. It's so uncertain the first minutes of the market opens. That is why also we use 15-minute candle for the school run to dictate where the market is going, right? So in this scenario, if we had taken this trade right here, it's a good setup. Liquidity sweeps. So we have 15-minute liquidity. We put our stop loss underneath this liquidity area and we mark out these highs as take profit areas, right? And we would have got stuck in this scenario right here. So that's why it's better to wait a bit before market open. A bit, let me be more specific, between the first 15 minutes, first 10 to 15 minutes. There is liquidity right here. There is liquidity right here. There is, ideally, it takes out this 1 hour liquidity and continues to the upside. So the 15-minute candle closed, no school run. Because this first 15-minute candle right here is a bearish candle. This indicates, so we have 1 hour break of structure going to the upside, 1 hour break of structure going to the upside. We have a 15-minute inside the range school run, not school run, if you know what I mean. Meaning that because we are inside the range, the school run breakout is not valid. So the first negative candle indicates that the market is going bullish because there are buyers coming in right now to take out the sellers. So I'm waiting for the liquidity right here to be taken out before doing anything. Right. This is contradictory to the conflict and a bias. This is a positive candle, meaning it's going bearish. But still, it's not 100%. Okay, liquidity has just been swept. I'm removing this alert right there. Now, if we see a setup, so we have our bias as a trend bullish. We have a 50-minute liquidity sweep. We jump to the 1 minute and we wait for the 15-minute, 1 minute to create a breakout structure for us to enter the trade. All right, we're waiting for it to do a breakout structure. You can see that the seconds down to the 1 minute candle is right there. Not 15 minutes, 1 minute. Right, there's a high, low, there's a high right here, waiting for it to break structure for entering a trade. Ideally, what it does is it continues to the downside, take out this liquidity, and then reverse to the upside. Here we go. Getting ready on the broker. No, it did not break structure. Probably gonna continue to the downside. There's a new high created right here. We're waiting for this, or until this closes on in 35 seconds, then the high will be valid right here. Because we need the high and the low to be able to find the high to be able to indicate a break of structure. We still want this high right here. Right. Just broke structure to the upside, created a fair value gap right there. When this candle closes, this might just spike up. Uh, Check the DAX, or reverse it. So I have my stop loss preset right now to this area. Tap into this fair value gap right here. 5 minutes gap right there. In my hands on the trigger almost. Not taking the trade yet because I'm waiting for the second to drop because this can be an invalid fair value gap. Yeah, see? It's invalidated before until it closes the candle. So I'm watching the seconds right now. I have the seconds. Currently, I have it's 1 second ahead of my broker. So I'm watching more than my broker than I'm watching my liquidity. Okay, it's invalidated. 3, 2, 1. This would be a good espresso. This could be this trade because it broke, invalidated the fair value gap. Still waiting. So the 50-minute candle is about to close in about 40 seconds. We see that there's a high, low, probably a high will be created right here and then low. So we're not stressing with it. All right, it just created a fair value gap, a new fair value gap right there. This looks clean. I don't like this trade. I don't like it. Why? Because these fair value, like it's only one break of structure that's happened. This is not a break of structure, right? I'm not counting it as a break of structure. This could still continue to the upside, but there's no clean setup. So if this candle right here was here and giving me a clear break of structure and then entering this fair value gap, all right. And also on the 50-minute, you can see that there is a high, low, high created. Probably if this continues to the upside, but it might also continue and create a low. The DAX is moving differently today. The DAX, no, this is the break. Let's see if it taps into this fair value gap right there. Come on, side. Go down. Because we have fair value gap right here, and react to the downside and gives the reaction. Right, it just tapped into the fair value gap. We can see the reaction up. That's why we wait. You see that? This is an invalid fair value gap right here. This is an invalid fair value gap right here in about 13 seconds. I'm not doing it. I'm not taking the trade. Removing all of this. There you go. Invalid fair value gap. I'm waiting for that sweep liquidity to be able to do something because it's consolidated in this area, right? I'm waiting for it to sweep liquidity, and then we can probably find a setup on an entry. Right. Still nothing happened. So I just took this trade right here, low risk. This is the espresso, right? So I just entered on a short right here because we invalidated this fair value gap. And basically, I'm just reversing the entire trend. This is a low risk trade. This is a low risk to high risk uh, probability. So I'm just giving it a try because what am I seeing the market doing right here? Probably continuing to the downside, probably taking out. We respected this liquidity area and then taking out this liquidity and then continuing to the upside because also there is a higher high, higher low, and higher high, higher low, lower low created, and then it might continue to the upside, create a high, continue to the downside, create a lower low. Also, I'm waiting for the DAX to continue to the downside. I'm inside this trade right now. We'll see what's happening. I'm not looking to take a 1 to 5 or a 1 to 3, not 1 to 5, 1 to 3. But the 1 to 1 is simple right here because this is very quick trade. Hopefully, it continues to the downside. Take out these three areas. We have right. So this is a clean setup. I'm not thinking about the short I'm taking right here. I'm thinking about the long that I might take right there. I'm ready for it to do reaction to the value gap. Yeah. So I was just about to prepare my long position to be able to take a trade. I don't want to confuse you with this. It seems like I'm all over the place. I don't want you. So the DAX just took out liquidity, and this continues to the downside. Probably continue to the downside even more. Here we go. Okay, our first take profit. Basically. I'm waiting for it. I'm expecting it to do a pullback to the upside right now. Why? Because tap into this fair value gap and then continue down to the take profit area. Here we go. I haven't taken profit yet. I haven't now. Closing the position manually, and I took a 1, 2, 3, 4. Great, great. Hmm? This was a low risk trade. I risked 0.25%, so it wasn't that big of a deal. These trades, I want to take them not to affect my long-term plan right here. Because my long-term plan right here was to go long, right? Was to go long, and didn't give us a long position right here. It invalidated this fair value gap. It invalidated this fair value gap, right? It validated this fair value gap, and this is the third one. And it's a good trade. Now, let me just give you some perspective. This trade, if this area, if this liquidity right here was a 1 hour liquidity, then I would have put a little more risk into the trade because it's a higher probability of the market taking out higher time frames liquidity to be able to continue to the upside. It gives them more of a "Okay, let's take out more liquidity before going to the upside, right? And you can see it just tapped into the fair value gap. Maybe it continues to the upside. Okay, removing this. Audio interruptions. You can hear me fine, right? Let's see, we can find another entry right here. Tap this liquidity. This, this is at market open. All right. I'm gonna take a break, 5-minute bathroom break, stretching break. Just don't want to miss this. I'm putting an alarm on this liquidity area on 1 hour. I'll be back. So you can see I'm taking breaks. I'm using the timer on my computer, and every 45 minutes the timer rings, and then to get myself even keeled and away from the chart. I'll be back. All right, I am back. All right, just for 15-minute liquidity. I'm watching the time. It's 9:50, which means that the 1 hour candle is about to close in 9 minutes, 9.5 minutes. So what is the Nasdaq? This is the 1 hour candle wick right here. You can see that the Nasdaq and the DAX are pretty close. These movements are pretty close to each other. The DAX, Nasdaq. So if this on the DAX takes out liquidity, I'm looking for it to take a long right here. Right? It just swept 1 hour liquidity. The markets and the DAX. Yeah, close the DAX again. Liquidity being swept right here. I'm waiting for this high to create a breakout structure, going to the upside. I'm leaning more towards taking a trade on the DAX. The DAX, why? Because the 1 hour liquidity has been swept right here, and 1 hour liquidity has not been swept on the Nasdaq. So this can continue to the upside, but there's a high probability of this DAX following the same move, and it's taking out the 1 hour liquidity, which it hasn't done on the Nasdaq. We're waiting for it, and also the 1 hour candle was about to close in 3 minutes. So usually what happens is that the 1-hour candle closes and then creates a high, and maybe it returns back down, but this is the move we can take this short move right here. Seems short, but can be a 1 to 2, the equilibrium of it. See that the DAX is moving or Nasdaq is moving up, but we have a 5-minute fair value gap right here and right there that we can react from going to the downside. The market is still uncertain. When moves like this, the high, the low, there's a high, there's like it is like a piano, right? The market is still uncertain. Where are we going? Are we are we doing a push up to the bullish side or are we waiting? And it hasn't yet decided. See? Let's jump right here. Did we miss some news or what? Look at this spike. It's undecided and it spikes to the upside. Right? If it closes, then it's a breakup structure. Right? So it just closed. Probably create a fair value gap right there. This happened exactly at 10 o'clock. There wasn't any news. No, no fair value gap. These spikes are different. Am I missing something here? These is low Brandon Roop CPI. There's CPI news at 10 o'clock. This was today. This was now. CPI, CPI news. There's a lot of news, but these are low impact news. However, if they are all happening at the same time, it affects the market. And it did a bit. When the US have news, like CPI on the US market, or if FOMC week, or news coming out, you can see that the candle just spikes outside of the screen almost. This is what the Germany CPI does. These spikes, 20 pips, 25 points. I put an alarm alert on this 1 hour liquidity listed down here. These liquidities right here might be taken out. What is this? I don't like these spikes. I'm still bullish. Come on. If you give me a setup, I'll take it. Right, waiting for a break of structure to happen on this kind of right here. The market wants to continue to the downside. Looking like this is another 1 hour liquidity resting right here. Right. Just switch this liquidity right here also. Remove this, put this liquidity area right here. Now, waiting for reaction to the upside. Why am I still bullish? Because if I go to the 1 hour time frame, there is no break of structure created. This is not the body of this candle did not break over this wick right here, which gives me an indication that we are still in a bullish trend, right? And even though we're not looking for the biggest move ever, we're looking for a small move, take some small profits, and let it continue to the downside if it needs to. All right, waiting for a break of structure. happen? Probably gonna continue to the upside. Why am I saying this? Because the 50-minute candle high has not been created because we've had low, low, low. We need a high to be able to continue low. Still, we're waiting for an entry. All right. All right, waiting for a break of structure to happen right there. Looking at the Nasdaq, that's a good sign, but we're continuing to the upside. All right, this is taking a while. Huh? Right, come on, do a break of structure. Good sign. So we're waiting for a break of structure to happen right here. A good sign is that Nasdaq is doing this, continuing to the upside. That's an indication that they are closely related to each other. So I'm waiting for a break of structure to happen. The body of the candle needs to close over the wick of the candle. No, still, it might create a fair value gap right there. So, so why is this trade not good? This is what I'm thinking right now. Okay, you're thinking about taking this trade. Okay, fine. Why is it not good? What's not positive about this? The things that's not positive about this is that the breakout structure is not that clean because we have a wick right here in a body. It still counts as a breakout structure, but it's not that clean as like this breakout structure, you know, on the body of the candle. Number two, the fair value gap is all the way down here, right? It happened after the move, before the move, which is fine, but it's still small. It's still not um, clean fair value gap like this one right here. But this is the downside, but you know what I mean. So that's the main reasons. We talked about the red team, blue team that I got from Tim Ferriss, author of the 4-Hour Work Week. He talks about when he creates a project, he always red team, blue team, as they do in the military. Create a project, he has another team to try to do everything they can to destroy it, to find the flaws and the breaks inside of the project. So we don't become too naive to the all right, this is so good, let's just do it. Test it. They're testing it. They're trying to be the devil's advocate to the trade in the scenario. And this almost brings us back to reality because we can hope for this to go up and we can have this is the, oh, it looks like this on the NASDAQ. which means it's gonna move the same way on the DAX. That's not certain. We use it just as a reference, but we still don't have an entry, clean entry. And this had been a beautiful trade if the liquidity has been swept, right? But it didn't sweep the liquidity. Set up right there. DAX, DAX, DAX. Right. Break of structure, a clean one also. Just reason weights. I'm looking for it to touch this fair value gap area after the candle closes. I'm checking if there's a fair value gap right there. There is a fair value gap right there. Just tap into it. I'm waiting for it to give me a reaction to the upside. Yeah, that's the reason we wait. It's invalidated. Yeah, you can see the body of the candle closed underneath. Yeah, Nasdaq is moving good. So what am I looking at now? Right to do? That's unfortunate, really. We waited all this time. No trade to take. Uh, downside without us. That's fine. I'll give it a couple of minutes before doing anything, and if not, we're done for today. Continuing to the downside. I'm waiting for it to continue down. Maybe take out all the orders, people going long and not waiting right here, and then maybe creating another entry or entry for us to take. Um, this has been a long wait, huh? Are you really going down to all to these areas and taking out these liquidities? If it doesn't give us something right here, indicates that it's going down. We're done for today. Hmm. All right, we're giving it another try. See if it breaks structure. Setup is not clear. All right, waiting for a break of structure to happen right there. Right, it just broke. It's about to 3, 2, 1. About to break structure. Waiting for it. And this reverses to the downside. We have fair value gap right here on the 5 minutes. Let's see if there's a fair value gap right there. Yeah, didn't create a fair value gap. All right, that's about it, guys. I don't wanna. We don't wanna sit next to the market way too long. That's about it. That's for this trading session. I hope you get some value out of this. Unfortunately, we didn't find the trade to the upside, right? It was a good day, but all the confluences was not there. We had a great liquidity sweep. We had a great liquidity sweep, break of structure, reverse. Liquidity sweep, break of structure, reverse. Liquidity sweep, break of structure, reverse the downside. Liquidity sweep right here, break of structure, maybe reverse to the downside. That is why we wait for the fair value gap reaction. That is why I got this question the other day. Can I take the trade only with the break of structure, meaning trend, liquidity sweep, and only the break of structure? You can do that. That can work, but it builds bad habits, and sometimes, or most of the time, it's better to wait for a fair value gap reaction to be able to know where the market is going exactly. not exactly, more probable that the market is going that way. So that's why we use more confluences. Right. That's about it for today's trading session. Talk to you in the New York session. Have a great day. Let's see. Thank you. Thank you.